Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. If you're new to my channel, then just for understanding purpose, weekly sectoral analysis is a video where I do detailed analysis of all these important sectoral indices which you can see over here on a weekend. And then apart from the view on index, if there are any good stocks available, and I also share my personal view on the same. So starting with Nifty, what we can see in the weekly time frame chart is that the trend is up, and you can see this particular support which worked pretty well, 21,700, which I've been repeating pretty often, that since it was a support in the weekly time frame chart and in the daily time frame chart due to Fibonacci, it worked pretty well and it did hit a pretty good bottom, and from there we have been rising up. Over here we had a very bad consolidation, but if you remember in my previous week's video, I clearly said that more the market consolidates, the better it is for the market. Now, if I go to a smaller time frame chart, which is the hourly time frame chart, then you will be able to see that the markets did correct pretty nicely on 4th of April. And I had dropped in this particular support band over here. And the coordinates for these support band were 22,167 to 22,232. So you can see the low is around 22,300. So at times what happens is market have its own mind, and it probably found out that there is some sort of support on the downside, and before even testing it, market started rallying on the upside. Now if you check the daily time frame chart once again, yes, you can say that the breakdown which did occur over here, okay, the breakdown which did occur over here, from there we had a downward movement, then an upward movement. There has not been a proper penetration of this rising wedge formation, which is still not good. But I guess if we close above this level, 22,550 or 22,600 properly, then probably markets will head towards 22,750 or maybe even higher in the coming weeks. All right. Looking at the weekly time frame chart, there is only one thing which we need to understand, that yes, the trend is up, but whenever the markets are going up, there has been one thing which is pretty dominant: higher highs and lower highs in RSI. This particular reading is not that powerful, but the one which has emerged right now is pretty decent enough. Yes, it can be negated if the market continues to rally. Probably this particular reading which has come up on the weekly time frame chart of Nifty spot can get negated, but for that we need high amount of momentum visible in the, especially in the weekly time frame chart. So that is what we'll be only able to see in the next couple of weeks. But what I'm trying to say is, yes, you should be bullish cautiously and try and take bets on stock only which are high probable. Do not jump into any random breakouts. Now, going ahead, if you have a look at the Bank Nifty, what has happened is, after a down move, we started going higher, and suddenly, special thanks to HDFC Bank, out of nowhere it started rallying. You can call it index management, you want to call it whatever you want, but exactly what has happened is that HDFC Bank took a support of this particular Fibonacci extension. It gave a bounce back, and this bounce back is actually a pretty short-term up, pretty nice short-term uptrend in the daily time frame chart. As a trader, would I like to trade this one? My answer is no. The only reason for that is you can see there were a couple of big gaps. So obviously, as a trader, I would like to, stick to quality charts rather than just because stock is rallying after a pretty long time, I would like to jump into it and enjoy the rally. No, I'm not that sort of trader. So I'd like to stay away, but it's good to see that HDFC Bank has participated once again, and it is helping the Nifty to stay on the higher side. Now, in Bank Nifty, if we have a look properly in the daily time frame chart, we can see one thing, that now it is approaching a medium-term resistance which is at 48,800 and 48,660 or 650. So this 150 points range between 48,650 or 48,800, it's going to give a decent resistance to Bank Nifty. Probably a small consolidation cannot be ruled out in Bank Nifty once this particular resistance is tested, and a consolidation probably would be much better than a sharper correction if at all Bank Nifty wants to continue to rally higher. Now, if we deep dive into the PSU banking chart, we can see that slowly and steadily PSU banking charts are rallying. I would be more happy if they would have consolidated or corrected a little bit more and then rallied, but it's fine. Market has its own mind. There is one stock which is evident to me just as a short-term momentum trader, SBI. Now, what has happened over here is in the daily time frame chart, the stock has rallied and it has dipped down, and you can see as a short-term trader, I mean a person who's trying to trade for probably 3 to 5%, not more. You can see 3 consecutive bottoms which are higher than each other, and there is a decent possibility that the stock will try to rally higher and it will test probably 790, 800 or maybe even higher than that in next week or maybe in next couple of weeks. So you can expect a decent short-term rally in SBI. In the private banking space, what we can see is that the weekly time frame chart is now looking much better in comparison to the last week. Momentum is also visible. Only thing is, yes, this gap is going to be a little bit of question mark that what's going to happen, that will it hit and again dip down or will it surpass this gap? Only time will tell. But in the private banking space, I have one stock which I guess I would like to concentrate on is IndusInd Bank. Now, this stock has rallied pretty nicely from March 2023, and after correcting, you can see that it has corrected a portion of this rally. It has not been correcting completely. Okay, it has corrected a certain portion of its rally, and now it is consolidating. So in case after the consolidation, in case if there is a breakout from this rectangle pattern on the upside, then positional traders should keep a watch on this stock. You should not miss it. All right. Energy Pack. Now, Energy Pack, as of now, to be very frank, I would like to completely stay away. I feel that this particular sector needs to consolidate a bit more in the next few days or maybe next couple of weeks. Only then probably we'll have maybe 1 or 2 stocks at our disposal for a short-term trader, not a swing trader, but for a short-term trader. But as of now, I would like to stay away from this sector. Metal Pack. Now, Metal Pack, if you remember my comments on the Metal Pack in last couple of weeks, I've been constantly saying, looking at the weekly time frame chart, that this is a particular sector which has been consolidating, and as far as it maintain this particular zone of support, there is no problem for this particular sector. Only issue is that there is no steady trend. This particular sector is more for a swing trader rather than a positional trader. The reason for is that short-term rallies and it dips very sharply. Short-term rallies, it pulls back pretty sharply. Over here, it was in danger of bisecting this particular low, but luckily it did not, and it started rallying pretty nicely. Now, what is evident is that we have hit this important Fibonacci extension. Will it consolidate or not? It's a question, because in last 3 days, it has not been able to move higher. Yes, it has closed a couple of times above this Fibonacci extension, but at times Fibonacci extensions, they act very, very weirdly. They will close above it a couple of days and then again the price starts moving on the downside. So we need to be a little bit careful about that. But if in case if there is a dip or a consolidation, then yes, swing traders should keep a watch on this particular sector. Autopack. Now, Autopack has also rallied pretty nicely. Since the momentum on the upside in the Autopack, especially this rally, it did not had a very, I'm sorry for my throat because I'm still suffering from a sore throat. So you can see that this particular resistance does exist, but since the momentum in this particular and the volatility in this particular rally was not extremely high, there is a decent chance that we might surpass this particular extension and we could travel higher. Now, one stock which I had already shared with all of you in probably last few days was you can say Tata Motors, and it continues to rally pretty nicely. Although the momentum is lacking, you will not see a lot of big candles over here, but yes, we can say that the rally is still continuing. Now there is one more stock which I can see as of now, this stock is not participating a lot. Okay, it is consolidating. But one positive sign what I can find out is that the stock rallies, it consolidates, it corrects a little bit, and then it starts rallying higher. So similar sort of characteristics are available even over here. But in comparison to this low, there is one more confirmation which we can see is that this is the first low, this is the second low, and this second low is higher than the first low, which is a good sign. So in case if we see that we have a decent breakout on the upside in the daily time frame chart in this stock Bharat Forge, then positional traders should keep a watch on this stock. All right, let's move ahead. In the finance pack, we can see that things are looking pretty nice now. Yes, and the weekly time frame chart is looking pretty confident. Even the daily time frame chart is looking pretty confident. And what we can see is, yes, we are hitting a resistance very soon. So after hitting a resistance, if the index consolidates rather than correcting, then there is a decent probability that the index and its constituents will continue to rally nicely on the upside. But in finance pack, I would like to share one thing, that you will have to be very, very careful which particular stock you are picking for your trades. Like one stock which I can see right now is HDFC Life. Especially the hourly time frame chart is very, very interesting. If you can add volume over here, especially, okay. So what we can see over here, I'll just try to, yeah. So what we can see over here, that when the stock was consolidating, especially in this zone, you can see there is one positive part over here and one slightly negative. I'll highlight both of them. When the stock was consolidating after a rally, rather than correcting on the downside, the stock started consolidating. Within this consolidation, generally what happened is the volume drops down. This time the volume did not drop, it stayed the same. In fact, it was slightly higher than the previous few weeks or days. In this candle, when there is a type of up move, there has not been much volume. That is one small negative point. But overall, you can see that the volume activity has been pretty good. The price has not dropped much, and the price has also taken support from its previous lows. You can see this low has been giving support to this low, and there is a gap over here somewhere around at 631. So if we have a pretty nice big green candle above 632 closing in the hourly time frame charts, then a decent rally for the short-term traders or the swing traders is possible in HDFC Life. Okay. Consumption pack, I guess, has taken support from here and continued to rally. It will consolidate and it will again try to go higher. Only thing which we need to be careful of, that once again we have a sign of higher highs in the consumption pack and lower highs in the RSI. So we need to be a little bit wary about that. But other than that, things are okay. So the trend and momentum not are in sync. So picking up stocks from this particular sector, you should be very, very careful. Now, one stock which I shared with all of you, it continues to rally. The momentum is not very, very high. The momentum is average, but still it continues to rally pretty nicely. Havells India. FMCG pack. Now, FMCG pack is consolidating in the weekly time frame chart. It's looking very lackluster. I'm not even interested to look at it. In the daily time frame charts, you can see that it is consolidating. Last few days were a little bit interesting, if I'll just try to highlight for all of you. So you can see this particular a few candles like 1, 2, 3. Now these three candles were slightly bigger in size, so it felt like maybe the sector is trying to come out of its consolidation. But since the main stock of this sector, which is ITC, is not performing pretty nicely, that is a reason why FMCG sector is as an index is not performing. There was one stock, although, which I had shared with all of you, Nestle India. It has been able to give a breakout, but apart from the breakout, it has not been able to perform. As of now, it's still holding on. But yes, if it closes below, you can say 2460 or 2450, then the positive view which has been created for the stock will be negative. Infrapack, I guess you can see very, very clearly that we do have an uptrend. We do have a higher high in infra, lower high in RSI. So again, if you're picking stocks, be careful. I would like to trade short term in infra, not extremely medium term or something. Maybe one or two stocks here and there is a different thing, but you have to be very, very careful when you're picking stocks from infra, especially pick stocks which have recently corrected, consolidated, and after that, they're trying to give a new fresh breakout. If you're picking a stock which has already rallied and is giving a new breakout, it has not consolidated, it has not corrected, then your risks of making lesser money or getting stopped out will be higher. IT. Now, IT is something which we need to understand that it has corrected. In the weekly time frame chart, it is looking lackluster. In the daily time frame chart, there is one thing evident that we have come very, very close to this previous low. Now, it's very important that the IT index stays above it. It tries to consolidate. Maybe if it pulls back, it will be even better. It is very difficult to comment anything because there are few stocks in IT pack which have started rallying. Few are consolidating and few are looking very weak. So it's a very mixed sort of view. But although the main leader of this particular sector is Infosys, obviously, and one sign which I can see is that there has been triple triple positive divergence in RSI. This is not a positive divergence, but it is a sign, triple, you can say, sign that the downside momentum for this stock is getting very, very weaker. So in case if this stock holds on to this particular low, you can see that the stock has dipped below it, closed below it, but it is not very confident since the candles which have been made over here are not that confident. So let's wait maybe a week or so and understand that are we trying to embrace a pullback where we can test 1542 or maybe even higher, or we will close below this confidently and continue this downtrend. Only time will tell. So let's wait and watch. Pharma pack. Now, Pharma pack in an uptrend, pretty much overstretched. In the daily time frame chart, the trend is up. But as a trader, I had clearly told that I'm not in a mood to trade just every breakout in the Pharma pack. And I had shared one stock, which is Aurobindo Pharma. And I guess this stock has been able to give a pretty nice breakout at 1135, 1137. Now, after this, it may or may not consolidate, but it seems that we are now in a decent uptrend in this particular stock. PSE sector. PSE sector, we can clearly see extremely overstretched, and I would be happy if this particular sector would have consolidated or corrected a little bit more before moving up. So as of now, I'll stay quiet and will not have any biasness for this sector as of now. Let's wait and watch. Realty pack. Realty pack, you can say 3 times. This is the third time we are having a higher high in price in the realty pack, and this is the third time when we are having a sign of lower highs in RSI. So this is a very clear sign that the trend and the momentum are not in sync, and you have to be very careful. Trading short term in this particular sector is fine, but if you try to initiate trades for medium term, you have to be a little bit careful. And that's my view for this particular sector. Mid caps. Now mid caps, again, same thing. It has been able to give a pretty nice breakout on the upside. It might consolidate and move even higher, but we need to be careful that again there is one more sign in the mid cap space that we have this triple three times that the highs are higher in the price, and three times when the RSI are clearly giving signs of lower highs in RSI. So you need to be understanding that this is not a sign that the correction has started or something, but yes, you need to be careful. You need to understand that picking short-term trades will be more wiser than picking medium-term or long-term trades at this juncture. All right. So I guess summing it up all, market has started moving higher. Many people would be thinking that is it a pre-election rally or something? Well, it could be, but please do not forget that we are consistently getting signs of higher highs in price and lower highs in RSI in many indexes. So yes, as a trader, I'm not saying do not trade, but be careful about your stock picks. Trading short-term, momentum trading, swing trading makes more sense right now. Yes, if you have any trades on the positional side, you need to be willing to take the hits, and at the same time, while taking your picks, while initiating trades on the positional side, you need to be understanding also that the stock which you pick has to be in an uptrend. It has corrected, it has consolidated, and then it is giving a fresher breakout. If you're picking stocks which have already rallied and overstretched, you have missed the rally and you're just picking them up because of the fear of FOMO, then there is a pretty high chance that you will hit a stop loss. All right. Trade well, trade less. Take care, guys. Thank you.